S&P is still sitting at that DTL. We're going to start there. We're going to go through the indexes. Some of these names, big movers after hours, some government funding going on. A lot of really weird movement today that could say that we do have a change in sentiment. I find it pretty interesting that today was the day that this happened. So let's just kind of go through it. If we look at the DTL, downward trend line is what DTL stands for. We can all see that we've been riding the lightning. There's no really other way to refer to it. You have a doji in here. That really shouldn't be surprising that we're not getting a lift going into the Fed because people are going to adjust whether it's 25 or 50, and we should probably start there. So over the weekend, if you looked at any investment bank's research, they had us at 50-50. Now, what we're seeing is 67% to 33%. This changed within a day, within 24 hours. There's a couple reasons for that. A lot of the software downgrades today, or rather semi-downgrades, apologies, would have probably put some weight on this, specifically even what happened with Apple. We'll get to it. But if we look here, third, 67%, you're seeing some data that's not great. Some data came out today like Empire did really well, Empire Manufacturing, but all right, 67%. For those that don't know, this is how you read it: 5.25, 550, and then you're here at 475, 500, 500, 550. You get it, 50 basis points of difference between these two, 67%. And if you did it over here, same way, you would get 25 basis. So this is where you're at for September. If they do nothing, it would be a bloodbath. Let's just call it what it is. If they don't do 50, I think the market's going to be upset now. And that would also mean, this puts you in a weird position because it also means that the REITs, the utilities, everything interest bearing is starting to set up for 50 basis points. If we don't get that, that means that those interest rate bearing trades could now have a little weight to them to the downside. And then we have to get through the dot plot, which comes out quarterly, which we'll have to deal with and we'll be going over as well, probably tomorrow, but it's a precursor. And then we have to go through itchy speech. So you have a lot of hurdles to jump through. And then if you take a look at November, right into election, and they tend to not do a lot around election. So the idea that they're gonna cut again here, and now we have an 82% chance of this. I mean, it's pretty staggering to say that, oh yeah, I think we're leaning more towards that 100 basis points here to 75 basis points by this period of time, by November. That's a lot. And we didn't really move that much this way. You kind of slid down a little bit on the point system. If you look here, pop into December. And this is where it gets really interesting because you're definitely skewing more down the runway. In other words, November, yeah, we might do something, but look at this 375, 400 by December. I can't tell you, I've been doing this 25 years. I can't tell you the last time I've ever seen them telegraph cuts this far out and this deep. And, we go through this and we try to say it's not a recession. It's not going to be a recession. There's one graph I really want to go over with you guys and just show you what I think you're going to be dealing with. But if I look at this, this is pretty telling to me. I can tell you, I can never see, and if you can think of a time where they telegraphed that this is what they were going to do, I don't have it. I know we had the dot plot that started with Bernanke, but it was nothing like this. And if you look down here, 375, 400 versus where you currently are, and you think on the high end, they're saying $1.50, there's a 20% chance by that. It's a lot. It's a lot to be here. So you're saying $1.25 to $1.50 by December. And we haven't had one cut yet. So did we swing the pendulum too fast one way or another? I'm not sure. Are things eroding that fast? There's some signs that things are eroding, and we should cover some of this. So let's do it. Now, what you're looking at is a graph of what happens when we have rate cuts. And this is very simple to look at, very simple to judge and say, oh, well, it always matters. You just drop with rate cuts. It's probably one of the most biggest, in my opinion, misnomers out there. There are times when you cut rates where you go higher. You go a lot higher. And I want to point this out. This is by Goldman. This is not something I created. This is the Fed cut line. And what this is pointing out is this is currently where we are. This is S&P performance around start of Fed cutting cycles. This is the percentage that you would be up or down. This is the amount of time that it takes. So you'd be at the zero line from the first cut. And then from there, you would have your movement. Now, this is where it gets super interesting to me. Because if they take all those times, they note one thing. The first 3 months, 2 to 3 months of this time, you get complete massive uncertainty. Sometimes you go up, sometimes you go flat or down. If you're going to have a recession or if you're going to pop out of it, the majority of time, in that first 3 months, 2 to 3 months. So that puts you, if you cut now, that puts you in November, December, that you're going to know whether or not we have a recessionary environment or we don't have one based upon historical data. This is really important to get because you're going to see a lot of movement on both sides going into this. And a lot of people are missing this, saying, oh, we definitely are going to drop. We're definitely in a recession. I would argue that we've been in a recession, and for how long? It might be a small one, but for how long? We'll find out later when they really show us the real numbers. I mean, I've never seen anybody revise non-farm payrolls months and months and months and all to the downside. So it's absolutely ridiculous what they've done to the numbers. But if you take a look at this and how this is playing out, could we see something like this? Yeah, if you have increased productivity, here's kind of the rub right now. We're not really seeing increased productivity in anything except AI. And that's only a couple companies and some very specific names that have to deal with data, right? The data center names. And we'll go through some of that. But this was by Citi today. We updated our sector view, believe equipment group is heading to a mid-cycle correction. That is not increased productivity. That is called contraction, right? That's a real nice fancy way of saying contraction. So if the semiconductors contract, that's not where you want to be. While server AI demand remains strong, consumer demand across PCs, smartphones, and auto appeared lackluster. PCs, smartphones, and auto appear lackluster. We now see modest growth led by a 10% increase in leading edge, mature down year over year. Memory down year over year. So memory, think about names like domestic DRAM down, international up. Okay, so think about when you think of memory, DRAM, think Micron. We cut our estimates accordingly, TPs by target prices by 10% on the big three. AMAT, Lam, and KLAC downgrade across the board. Okay. Think about this. This is contraction, and they're cutting the semis. Now, this is where, to me, it gets fascinating. So they give us this fancy drawing, and in this fancy drawing, they put out play defense, play buy consumable, down cycle. Okay, if you're in a down cycle, you're in a contraction. I mean, it's pretty much that simple, right? And they're telling you this is where you're at, and you're not troughed out. So yes, we have AI. Yes, you have NVIDIA. Yes, you have those names. But you would think that something like this would just cause sheer panic. And it really didn't. Here's the stocks, and you open the close at the same number. Now, I'm always open to comments, and I'd be really interested in hearing comments on this. Do you think it didn't drop solely based upon the fact that you're going into the Fed and people are trying to figure out what to do? Or do you think that this has already been factored in? So there's two schools of thought here. Number one, is this factored in already from this July 11th, that CPI that was negative, that marks that date? We all know that this is when CPI month over month came out negative, July 11th. If you didn't know that, now you do. Since then, we've dropped. If we were to look at that drop, just putting fib levels there from top to bottom, we could see that 50% you're unable to get over, and you're hanging right around that 38.2, unable to get above it. 23.6 is here, right around there. So you're not really out of the woods, right? But if we then take all this off and then you drop this down to 1, I was actually short this morning off the open, did okay with it, didn't do great. But if you look at this, the rally up, the undercut right here, and this is where, to me, again, lack of better words, maybe I need better vocabulary, it gets interesting because they do the undercut, they pretend they're going to rally, then they drop you, and then it's on. But we saw this at 11:30 across the board because you had a bond auction at 11:30, and if you just kind of go in this area here, 11:20, 11:30, and go mark off things right around that area and go take a look at what happened to the market. We'll go through some of it. And then at the end of the day, they just rally you up. Now, the question really is, are they just rallying you up to go flat as we wait for the Fed? And the question might be, if you mark the open, yeah, they might be doing that. But this should have been way uglier, and it wasn't. And Goldman had notes on it too, and I'm not going to bore everybody with it. But that open, here's KLAC. You went to flat. Say it with me. Basically flat. Not really in here, but you get where I'm going with that. So all these downgrades, and they're not small downgrades. So the question really bodes, is this out of the way? Is this something that we knew was going to happen? If you take a look at Apple, which I actually shorted today and did well with, but I'm back to open and close. It seems to me that we're going to go out there and say, this is because of the Fed. That's fine, but this was unanticipated. So then you would go there and look at this. And there's a couple reasons why Apple did this, because their phones are going to cost more. They're not raising the price. The hardware is going to be delivered, and then they're going to upload the software after. We all know that that's going to be a fantastic sales move. That's sarcasm. So if you look at this level right here, it held. So you're holding that 14, 15 level, which is kind of interesting. And then you start going through some of the other names like NVIDIA. And again, let me just clean this off. I have a doji. So are we just going flat, or are we really just, okay, we already knew that this was coming because we could tell back here, or July 11th, and that's what we're dealing with? I don't have the answer to that. I'm seriously curious what everybody thinks about that. From a technical standpoint, you can see how you're wedged in here and how you're acting. There were some real bright spots today in the market, in my opinion. Number one, to me, was the way that some of these secondary data center names acted. VST acted exceptionally well. It's breaking out very nicely. You can see CEG, the power names, they're ready to rock and roll here. VRT bought the other day, that's doing very well. So you're seeing some of this. UPST does a secondary, everybody's panicked, but it closes above, so you have demand. Okay, this is actually fairly healthy. Take a look at the reads. They hit a new high. Utilities, you start going through these, they hit a new high. So it's not like we're seeing things fall apart, right? We're seeing the names that should be going up, they are actually going up. The SLGs of the world, the VNOs, right? These kinds of names, the Wells, anything that's associated, whether it opens up or down, it's really irrelevant, right? It's all about the theme. So then you start going, okay, well, what else are we noticing out there that's underlying all of this? And just stay with me, because this is where I think it gets interesting. So names like PLTR actually are pushing higher highs. You could equate that to what? Oh, they're going to be added to the S&P 500. So then dive into it. Okay, Affirm, back to highs. Right? So what you're seeing with some of these names is some of these secondary names are actually setting up to move higher. And I think that this is really important for us to pay attention to. Now, you have story stocks that are also moving. Okay, so now you start looking at the X's of the world, the US Steel. I think it's very interesting. This guy from Nippon flew in. Nobody said anything about it except, oh, we're going to wait till after the election to make a decision, which means we're probably going to approve it or some form of it. We just don't want to tell you because we want your vote. So, I mean, it doesn't matter what side of the aisle you're on. I'm going to be cynical either way. But we bought this down here, married puts to it. The easy money's probably out of it, but it's working. Then you start going through other names like HHH. Right? Ackman came out at 68 after this and said, oh, by the way, we're probably going to take it private. It's done nothing but grind up since then. You are getting story names that look really good. If we take a look at IEP, for example, this is a classic story of probably going to be a massive short squeeze. So Hindenburg got involved with this, trashed it, and if they closed, they did exceptionally well. I would imagine they closed or bought puts against it unless they're morons, which I don't think they are. But I mean, if you went from here to here and you didn't close it, you have issues. Or at least hedge it. You have real issues. But something down here that's really interesting, they came out and stated that they settled their case with the SEC. I have the note. So this was released today, September 16th. And what's pretty interesting about this is, to me, it's a pretty bold statement. Vindicated dismissal of meritless lawsuit that parroted false and misleading statements published by Hindenburg Research. So there was a lawsuit that was filed against them, and that has been dismissed. Not only has that been dismissed, they've gone after Hindenburg pretty aggressively in here, and I don't think this is over. I think there's going to be more of an investigation. I don't think it's going to stop with Icon. I think it actually started into some of these short sellers. That's my opinion of it, if you take a look at what happened recently with Andrew Leff. But I think they're going to look more into this stuff. That's where my head is with it. But whether or not he's going to come out and throw them under the bus, whether or not they were right in their report on the pricing, we can make that argument. Clearly, you shouldn't be trading that high over NAV. I've made that argument several times, specifically about Berkshire recently. But if you start looking at this, that the SEC's looked into this, there's no fraud, no inflation of their net asset value, nothing in proprietary distributions. They're not selling any of their units, right? So all this stuff comes out. Whether or not you're rallying for them, not rallying for them, at the time of recording this, I have a position in it. The point being is you have story stocks like this that are in action, that are doing their own thing. So what does that mean? Well, names like this that are coming out, hitting 18-month highs on volume, breaking out with huge short selling against them, they're going to be rally stories, and then Hindenburg will probably come out and say something. But this is not something that you have to worry about with the market, right? With the market, we have to worry about gold or silver, right? And now you're watching copper start to get into the mix. When you start to see this, these are the things that you want to pay attention to. So we have the story side of it, and then we have the sector side of it, and then we have the technicals going into the market. And that's where we should focus next, right? We should really focus on the technicals. We are seeing some things here where, financials need to make a decision. JP Morgan the other day hanging on here. It's still in this bear flag, but JP Morgan's hanging on here. But financials needed to make a decision today, and it looks like they made it. Now, as far as what we're seeing a push there because of the home builders, right? So we are seeing some sectors left, but let's look at some of the internal technicals of the market. Starting with the basics, what we're looking at here is stocks above the 5-day, stocks above the 20-day, stocks above the 50-day, and stocks above the 200-day. Now, what we're seeing today at the close is 90% of all names are now right at that level. This is usually a short-term top. Going into tomorrow, meaning you're pretty much locked where you are. I don't really see a tremendous amount here. of push that you're going to see tomorrow based upon how this is playing out. You don't really want to bet against this on a short-term basis, and I think that that's a fair assessment that you're just going to wind up going sideways. If you look at the 20 here, you came off this low on Friday, and ever since then you just see these moves, right? And you can see that right here, and then we just kept lifting. But if you go back to that Friday, and then you dropped, and then you come into that Wednesday where everything reverses off that bottom. And again, you know, the top level of this is right around that. You know, you get up to that 80 level. But if we just drop this down just to see that, you can see really you bounced at 24, 25. So that's the low end of where you tend to see a bounce. 80 up here is really where you start to see a sell back down short term. And you're kind of seeing signs of that already, aren't you? 50 days are back to the 77 level. You can pop over. Obviously, you can always go higher. But these are levels that we are seeing where they're getting a little tired. You are making what? Higher lows over and over and over again. You've been doing that since March. So that is healthy. And if we take a look at stocks above the 200-day, we can see how that's going as well. I think it's important to look at this every once in a while and just get a full understanding on what's going on. If we drop to something a little more basic and just look at something like the RSI, and what the best way to do this stuff is to look at the weekly for a second and just kind of see how you're acting, right? And see how that's starting to lift, but you're still under your moving average. I tend not to use the moving average, but I think that most people like having it. You can always comment on it. I throw it in because people are like, why isn't there a moving average? You kind of have a sense of where it is over time. My measurements are maybe a little different than yours. I tend to use different numbers, but if you take a look right here, you can see that level of resistance right up here, and that looks like 234, and you just keep rejecting that area. Now, are we going to get back up there? You know, we'll find out. Right now, I do find it very interesting that we went sideways. I'm in the camp that we just went sideways because people want to be flat going into the number. That's where my head is with it. But if I look at some of these names like Micron, we really didn't go anywhere. But again, let's get back to looking at the overall market. Here was our DTL, and this was on financials. You broke out. No matter how I want to look at it, financials broke out. So this is a positive, even though we're a little overbought right now. Financials are breaking out going into this. This is our DTL. We're above our DTL. Even if we look at the hourly bar right here, we can see that you have the right in here, you're set, and then you flip it, and then you grind into the close, and we all know who buys at the close. So I think what we'd really want to see here is follow through tomorrow on something like a JP Morgan. I think that would definitely be something to see if we take a look at KRE and we look at the regionals. The regionals are a little overbought up here, and they're not acting the same way. Matter of fact, they're already getting a little top heavy in here. So I do think that's something we want to look at. If we take a look at IGV, which is obviously expanded software tech, you're getting a little toppy up here and you're getting a little tired. Now you can stay up here for a while like you did here on the hourly. And if we just start taking a look at some of the other ones that have just been rocking and rolling, you can see what I mean. Like utilities, you're pretty overdone up here, guys. That's a big number on an hourly chart, and you're starting to cross. So are we setting up for some kind of blow off into what could be the FOMC? Yeah, you could. You could be setting that up. And the same thing could be here with XLRE, but we keep riding the lightning. So in other words, we're riding the line and we're not breaking it. Do you have a divergence here? You do. Does that work itself off? It could. So I don't know that you have to do anything there with that divergence. I don't know you have to concern yourself with it. What I would look at is something like this. So if I start looking at something like XLE, the breakdown, and we're still rallying, you're starting to see XLE hold a little bit here. And I think this is a pretty interesting spot for XLE. I think it's also a pretty interesting spot for oil going forward. And it's certainly something I would watch at that level. The biggest thing that I think we have to concern ourselves with is what's happening in gold. Why is gold rallying? Why is silver rallying? Why are we seeing that? That's not silver. Why are we seeing silver rally, right? And then what we're starting to see is now we're starting to see copper rally as well. And these are things that I do pay attention to. Now, this chart's absolutely fascinating. This is the McClellan summation, and this is New York Composite. And really, this is created off the oscillator. But you cracked here, you got a little slow, you held the zero line, and you're flipping right here. Okay, that doesn't happen without some level of breadth in the market. So when we see things like this, we want to pay attention to it because it tells you that the breadth is actually getting better. And the New York Stock Exchange, the names are actually lifting. And I think that's the confusion. We're broadening out, and I don't think people are fully aware of that. You're starting to see that in the New York Stock Exchange fairly often. So you are seeing some signs of that. And this is also fascinating and worth paying attention to. If I look at the line below, right here, this is the advanced decline line of the NDX, the NASDAQ 100. This is what the NDX is doing. So if I was to look at this you would have to say, well, the advanced decline line is getting better, and at the same time, we're not breaking out. So if the 80 line is here, for example, where you can see us setting up right at the same exact level, and then you realize that you're not here. So let me do it this way because it'll be a little bit cleaner. We'll get rid of that, and I'm not going to have time to edit this, so you're just going to have to deal with it. But if we go here, and that's just drawn awfully, so let's draw that a little bit better. We can do that. We can do stuff. See it? All right, and then we look at that line, which is essentially flat, and then you come to this, and you realize that you're not, right? That you're obviously breaking down on the NDX. Well, this might not be the worst idea to take something like this. And I'll show you, like somebody like, okay, thanks, Rocky. Now what do I do with this? What you do with this is you go take a look at the NDX. So one of the things that I do is I keep a list on everything. So I would go here and go, wait a minute, what's going on with the NASDAQ 100? Okay, and go and take a look there and maybe sort by change and go, okay, well, what names are moving? Okay, well, Intel, because they're going to give them gobs of money for some godforsaken reason. I'm not really sure when we became a welfare state, but I guess that was out loud, wasn't it? But if you start taking a look at things like crowd, okay, well, some of these names they're not killing it, no, but look how many names are up $1, 80 cents, 20 cents. Like, you think that you're in a market, this shouldn't be in here, but you think you're in a market, right, where it's like a disaster, right? And then you go through them and go, yeah, some of these names, yeah, they're down a bit. But the majority of names today are up, and there's money coming into the market where you might not be, the most comfortable with it, but you're seeing it over and over again, right? So we can say one thing, but if we look here, and you'll say, well, they're not up on the day. AEP is a name you should actually be looking at pretty closely here. A lot of people don't know that they've been in power forever. Like, they're in the power generation business. They've been around forever. And this is actually, I'm just going to mark this off while we're talking, that line, and I'll just put that right there. Put a little alert there, let me know, ding, ding, and go from there. But if I could leave you with this, I would spend some time going through these and taking a look at what's actually going on out. Because I can sit here and say, semis are down, this is down, that's down, we're rotating, this, that. At the end of the day, if the breadth is getting better, this has to get better with it. And before I give you a that's it, please understand one very particular thing about all of this that's very, very important for you to get. I only know what's going to happen maybe tomorrow. Maybe, right? Like that, I only know that far. After the Fed, none of us know how this is going to go. So we can look at this, we can pontificate, but we really don't have a clue until we see the data and see the reaction. That's it.